Okta, the cybersecurity company, has put investors on a roller coaster ride in 2025. Started the year around $75 a share, jumped all the way to $130 per share, and it's now back down to $85 per share. Of course, it's still up over 8.25% year to date in 2025. So revenue growth has been excellent for Okta over the previous decade, increasing from 100 million in revenue in 2016 all the way up to 2.6 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of just under 48%. The cybersecurity industry is forecast to grow for decades more, and the increasing time people are spending on electronics and digital lives is going to make cybersecurity that much more important. It's one of the industries I'm most bullish about looking forward, not just because of the growth prospects. Many industries are expected to grow. Growth is not the only thing I look at when I'm evaluating an industry. What I also look at is structural factors that make it more attractive for investors, and the cybersecurity industry is one that is attractive for investors. The opposite end of that spectrum is the electric vehicle or car industry, car manufacturing overall, and then electric vehicles specifically. Those are unattractive industries for investors because of the structural factors that impact profitability industry-wide. Speaking of profitability, Okta has done a good job improving its return on invested capital. It's still not generating a good return on invested capital. And by good, I mean comparing the ROIC with the WACC, which stands for the weighted average cost of capital. You'd like to see a company that generates a return on invested capital that's above its weighted average cost of capital. Okta does not do that, but it has been improving and making progress. Its return on invested capital improved from negative 23% in 2019 all the way up to being flat in the most recent trailing 12-month period. That's good progress, and the structural factors I alluded to earlier for the cybersecurity industry suggest that Okta's profitability should continue moving upward as long as the company continues generating revenue growth, which it's very likely to do. And the really good news for investors with Okta is that the company has hit an inflection point with cash flow. It's generated positive free cash flow or positive cash flow from operations for 6 consecutive years. Click the link below to watch the full video.